Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I've been seeing a lot of panic and arguing on Twitter and YouTube over what Bitcoin's next major move is going to be. So today I want to do a better job of explaining what each of these cycle scenarios actually represent and what data points we're going to use to figure out what Bitcoin's next move is, and my portfolio strategy to be able to handle and maneuver around all three of these possible outcomes. But let's go ahead and start with the easy cycle scenario, the one everybody is hoping for, where Bitcoin just makes a new all-time high and enters price discovery within the next few weeks. And this one essentially just represents what Bitcoin has done every 4-year cycle, where in Q4 of the halving year, Bitcoin consolidates and eventually breaks above its previous all-time high. And there's many people that are betting aggressively on that cycle repeating and on Bitcoin doing the same thing this time around. Another good argument for the easy cycle scenario is taking a look at Bitcoin's Q4 volatility historically and how in halving years, Bitcoin has seen nice rallies in Q4. And we've seen aggressive moves to the upside as we approach December of that halving year, like the one we find ourselves in today. And the most powerful narrative for this scenario right now is probably the election, especially with Trump leading on sites like Polymarket, which people that trade Bitcoin look at very closely. So with him leading on Polymarket and with the general expectation in this market that if Trump wins the election, it could send Bitcoin to significantly higher prices and send us into alt season. So the fact that many market participants are front-running this and are expecting this outcome, it could result in Bitcoin having an early breakout and following that easy cycle scenario. And we also have famous investors like Paul Tudor Jones saying that all roads lead to inflation and he's long Bitcoin and gold. And if we look at general search interest in Bitcoin right now, it's the lowest we've seen since 2020. So maybe within this market, there's a lot of people that are bullish, but in general, there's not that many people following Bitcoin too closely right now. And that's a good argument for why we could break out a little bit earlier than maybe most are anticipating, and we continue to follow the 4-year cycle. And in case the easy cycle scenario is the one we end up seeing, I have 70% of my crypto portfolio in spot holdings as of right now. Yes, I'm not 100% allocated. I don't have a 10x leverage long on Bitcoin where I'm gonna 10x my net worth. If we end up seeing that easy cycle scenario, the cash on the sidelines will not appreciate, of course, if crypto were to rally higher, but I'm going to benefit significantly from the move via this 70% spot allocation. Now, moving on to what I think is most likely the difficult cycle scenario, this just represents the situation where because the dollar index continues to rally higher, and we haven't seen the Federal Reserve go back to QE quite yet, Bitcoin has a chance of having a larger correction before actually getting the major QE-driven rally that we have seen in those previous Bitcoin 4-year cycles. We've been talking about how the DXY refuses to go down. It just keeps grinding higher week after week. It got above all major moving averages. We would have liked to see a rejection and roll over there. Now we are approaching the next level of resistance, but I have a hard time believing that Bitcoin is going to enter some incredible price discovery rally while the dollar index is rallying higher. Another reason why I think we might not be out of the woods quite yet is because there's a lot of people betting on that easy cycle scenario, and we've seen a huge increase in open interest recently, and we now officially have a new all-time high in open interest, even though Bitcoin's price hasn't even made an all-time high yet. And this is perhaps due to the fact that many investors know what happened in Q4 of 2020 and Q4 of 2016, so they're expecting the same price discovery rally this time around. But if we take a look at what the US dollar index was doing in Q4 of 2020, it was dropping quite aggressively after already seeing a huge drop starting at around March of that year, whereas this time around, we have the dollar index rallying higher in Q4 of the halving year. So if we look at the requirement for the past two mania phases, which was a huge drop in the US dollar index, it's hard for me to imagine that Bitcoin is just going to skyrocket here while the dollar index has been rallying higher, which also makes alt season quite unlikely as of right now, in my opinion, until we see that drop in the US dollar index. And the easiest way to visualize this is by looking at global liquidity, which is still going down. And I know there's a ton of different ways of looking at global liquidity. I prefer this one because it matches what we're seeing from the US dollar index. And it makes sense to me that whenever the US dollar index is appreciating, global liquidity should be going down. And this is what this chart represents. And if we look at Q4 of 2020, global liquidity was absolutely skyrocketing, whereas this time it's going down. And the backdrop for Bitcoin to have that standard halving year Q4 rally isn't quite there yet. And for global liquidity to increase aggressively like we saw in 2020, we probably need to see the Federal Reserve go back to quantitative easing and expanding their balance sheet once again. And that is something they have not announced yet. And as of right now, they are still reducing it. And I expect that to put downward pressure on global liquidity, even though we have some rate cuts over the next few months. Until they announce QE, I think global liquidity will continue going down, which makes it hard for me to envision a huge Bitcoin rally immediately that sends us to significantly higher prices. And I think we might require some corrections in price before QE actually comes in and Bitcoin can go into the six-figure price region. And this is why I have the cash position that I do. As I mentioned, 70% of my crypto portfolio is in spot holdings in case we end up getting that incredible rally in the short term. But in case of that difficult cycle scenario, I'm happy having this 30% allocation. I'm happy that I don't have very large leverage long positions where I would get liquidated if something like this were to occur, and I'll be able to take advantage of those pullbacks if we end up seeing them with my 30% cash position. So for me, I'm leaning towards these two scenarios being way more likely than the broken cycle, but I still think the difficult cycle scenario is a little bit more likely than the easy cycle scenario where we just rally to 100K plus in the short term. But I feel like I'm pretty well positioned to take advantage of both scenarios. And finally, that leaves us with the broken cycle scenario where the top for Bitcoin is already in, or maybe we just take out that high and roll over aggressively. And really the main way this happens, in my opinion, is that we see a bad recession for the US and global economy. This is why we talk about macro so much on this channel, even though it's supposedly a crypto channel, because recessions are very bad for risk assets. And in the past, when the Fed has cut interest rates without quantitative easing, we've seen big drops in risk assets like the S&P 500. And if the S&P 500 sneezes based on what we've seen historically, that's likely going to be terrible for Bitcoin. And scenarios where we could end up in a bad recession is if we see a big increase in inflation, because it will limit the amount of easing the Fed will be able to do. That's why we monitor data points like CPI and core CPI so closely. Things are looking okay in terms of inflation right now, but it's definitely something we'll continue monitoring over the next few months. And of course, the other main indicator of recession we have to watch out for is weakness in the labor market. That's why we watch our proxy for layoffs, initial jobless claims so closely. We get an update to this data point every Thursday. And if this starts spiking aggressively, we have to be really concerned with a potential looming recession. But as of right now, doesn't look that bad. Same thing with continuing jobless claims, and we continue to monitor the unemployment rate prints to see if the US economy is entering a bad recession, because then we have to talk about some serious downside targets on risk assets. And I may be forced to make some portfolio adjustments in the scenario where that occurs. The area where I'm going to make that reassessment is the 200-week moving average. If Bitcoin goes that low and loses that level, I'm going to have to make some major adjustments to my portfolio and reassess my short to medium term strategy, because I expect risk assets to perform terribly if we enter a recession. So for now, all we can do is wait to see what happens. I know people prefer it when somebody is all in on one outcome. You have the permabulls that just draw arrows to the upside and say we're going up. They did that in July. They did that in April and May. They said the same thing in March, drawing arrows like this one. You have the doomers that are always saying we're going to collapse and global depression is around the corner and sell everything and hide. But I think it's a lot easier to manage a portfolio and keep emotions in check by reminding ourselves of what the different possible outcomes might be, and how do we set up our portfolio in a way where we can potentially survive and thrive in the different scenarios, instead of going all in on one and gambling on that being the outcome that ends up happening. So for now, there's really not much for me to do while Bitcoin is in this fair value range. Very happy with my current holdings. If we start rallying into price discovery, we'll start talking about profit taking. If we go below 50K and enter the cheap region that I have marked out here, we can talk about accumulation opportunities. And I know there's a lot of mixed opinions on whether Bitcoin is going to go back to the low 40,000s again. I think it's unlikely but possible. I would be uncomfortable if I was 100% sidelined right now, praying for us to go to those prices. But I've seen Bitcoin do crazier things, and I've seen it do the impossible that nobody saw coming. So reminding ourselves that this is a possibility will make it a lot easier to not make emotional decisions if that scenario were to occur. So in the meantime, we'll keep an eye on traditional markets. It looks like the S&P 500 is having a bit of a pullback right now. The major warning sign would be losing these previous swing highs going all the way back to July 2024. We're also going to see if Bitcoin is going to close below its current trading range or close above it to confirm whether this is going to be a breakout or fake out. But as of right now, we're just going sideways in the middle of the range. So no major warning signs or reasons for excitement quite yet. But as we look forward to our long-term thesis, I don't think national deficits are going away anytime soon. If anything, it looks like the trend is only getting worse, and governments are keeping growth positive by running those huge deficits, which I expect to then carry over to the money supply, which is why we've been seeing so many ETF inflows and why Bitcoin's narrative is so good in the long term, in my opinion, just like the narrative for the S&P 500 and other risk assets, because we have seen a correlation between risk assets and national debt as governments continue to devalue their fiat currency. But anyway, let me know what version of this cycle do you think is most likely. Let me know how you're positioning your portfolio to be able to handle these various outcomes. And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.